that is the one thing that does keep me up at night. Trust me, if the S&P corrects, Bitcoin's going to correct, and that's going to be quite painful. Yesterday was fear, today we're back at extreme fear, tomorrow we'll be at extreme fear again. And so that indicator is kind of showing to me that it's almost bottom time. The people that still believe in the halving cycle believe that we've topped on the 7th of October as per the number of days on the halving cycle. And now we're entering a bear market. If we don't follow the 4-year cycle and we don't get into a bear market, then I think it's going to aggressively overperform the NASDAQ.
Ron Neuner is back. He is a founder of Crypto Banter. Check out his channel, one of the largest crypto channels on YouTube in the world. And I'm very pleased to get his outlook once more on the Bitcoin space, the crypto space, what's hot in cryptos, where is this cycle headed. He's made a number of very correct calls before. Check out his prior interviews with me. Links down below. Ron, good to see you again. Welcome back.
Dave, good to see you, man. I'm very impressed by the growth of your channel. I must say, it's been an absolute. It's been amazing how quickly you've grown this channel.
Time flies when you're having fun, Ron. It's been 2 years, and I'm very pleased to have good guests like yourself that are continuing to support the channel and help it grow. So thank you for coming back. Ron, you've been very bullish on Bitcoin. You and a lot of other bulls have been disappointed, no doubt, by the fact that Bitcoin is basically flat on the year. We've had its ups and downs. I'm not saying Bitcoin hasn't moved all year, but it's underperformed year to date. Everything else that investors may be following, well, not everything else, but it's underperformed stocks, it's underperformed precious metals, really. And I know this year to date thing is a social construct. We're just assigning a random period, but people like to, make these comparisons. You tweeted a few days ago, November 9th to be exact, we bottomed. Okay, who's we? What bottomed exactly, Ron?
So, yeah, I mean, look, I agree with you that Bitcoin hasn't had the most fantastic returns this year. Again, being a crypto investor, you kind of have to zoom out and say, well, we haven't had the best returns this year, but, net, we've got really amazing returns in crypto. In terms of the tweet that I tweeted around, we bottomed. As you probably know, Bitcoin's gone through a bit of a correction in the last couple of months, right? So if you go to the Bitcoin chart, and I wonder if you can see my screen at the moment.
I can see it. Right, yes.
Okay, so if you look at the Bitcoin chart, I think let me just go here. So this is the Bitcoin chart, and what you can see is that pretty much ever since the 6th of October, which was the peak, which was the all-time high, we've been in a bit of a correction. And if you take the top to bottom of that correction, you're talking about a 21% correction. Now, anyone who follows Bitcoin knows that 21% corrections, specifically at this point in the cycle, are actually pretty normal. So if you look at a corrections chart of Bitcoin for the last 3 cycles, this is the 2017 cycle, this is the 2021 cycle, and this is the current cycle. What you realize is that Bitcoin volatility and corrections in a cycle are pretty normal, right? Like a 29% correction here, a 40% correction here, 39% correction here. In fact, the average correction in 2017 was 34%. As the market matured, the highs got less high, and the lows and the volatility became slightly less. And if you look at the corrections over here, the average correction in the 2021 cycle was about 27%, and that included a very big 55% correction in the middle of the cycle. Fast forward to 2025, and this cycle is very much driven by institutions. We've got the ETFs, we've got the treasury companies all buying the asset, and so the volatility has decreased quite a lot, and the corrections have obviously decreased quite a lot. And so it feels to me like this correction is a normal correction. It's about the normal magnitude of a correction, 21%. Generally, in a cycle, a crypto cycle, a 4-year cycle, we get about 6 or 7 of these corrections, as you can see. This would be our 7th correction in the cycle, which is not abnormal by any stretch of the imagination. And yeah, that's pretty much the performance. So I do think that Bitcoin returns have been disappointing, but I also think that if you look at the returns of an asset after a 21% drawdown, then you're kind of focusing on it at a period where potentially we're nearing the bottom of a correction, which is my thesis.
Several people have been on the show and on other media as well talking about how according to past 4-year cycles, Bitcoin should have been at 150 to 250K already by the end of 2025. That is according to when the halving occurred, the previous cycle. And then if you extrapolate where Bitcoin ended up a year and a half after the last halving cycle happened, or halving happened in that cycle, Bitcoin should have climbed X%, but it didn't reach that level yet. And now people are speculating that the 4-year cycle is dead. It's no longer relevant. You've seen these, no doubt. The Bitcoin 4-year cycle is no longer relevant. Is that true?
Well, let's look at both sides of the coin. So for those people who don't know what the 4-year cycle is, every 4 years, the Bitcoin algorithm prints 50% less Bitcoin and thereby reduces the inflation of the number of Bitcoin coming into circulation. And generally in the Bitcoin 4-year cycle, a certain number of days after the halving, around 550 days after halving, the Bitcoin price usually tops. You can see that on this chart over here in 2017, where from the halving to the top was 525 days. You can see it in 2021, where from the halving to the top was 548 days. Now, ironically, that if you follow the halving cycle, the peak of Bitcoin's peak should have been around the 8th of October. Now, if you look at the current chart around the 8th of October, what you realize is that on the 8th of October, indeed, Bitcoin was at the highest point, which was about 125,000. That's the cycle high. That was on Tuesday, the 7th of October. So it's kind of freaky that when you do look at the 4-year cycle and you say, count the number of days from the halving to the tops, we are exactly at the top, and now we've started a correction. So that is why this correction is quite a scary correction for most people, right? Because the people that still believe in the halving cycle believe that we've topped on the 7th of October as per the number of days on the halving cycle. And now we're entering a bear market. And crypto bear markets from top to bottom can take about a year. So if you look at this, at this correction over here, top to bottom, about a year. And then here again, top to bottom, about a year. And they can be very vicious. I mean, this correction was a negative 84% on Bitcoin. And this correction was a negative 77% on Bitcoin. So the one theory out there in the market is that the Bitcoin topped on the 6th of October. And now we're entering a bear market. And that is the theory as to why some people are so scared of this market right now. Because they're kind of saying, look, you can say this time is different, but this time maybe is not actually different, and therefore we're now already a couple of days into the bear market, a month and 4 days into the bear market. That's one way of viewing it. The second way of viewing it is,
go ahead. No, go ahead, please.
Now, I was saying that the second way of viewing it is saying, well, the 4-year cycle is dead. And the reason why the 4-year cycle is dead is because right now Bitcoin and Ethereum are very much driven by institutions. This is no longer a retail game. This is no longer a game where there is the only liquidity in Bitcoin is retail. And therefore, because it's part of the institutional cycle, because it's part of the institutional cycle, then that cycle doesn't end in 4 years. And therefore, there's no reason to believe that Bitcoin is going to top right now. So then you may ask yourself, well, okay, if Bitcoin is part of the 4 years, if Bitcoin's not following the 4-year cycle, and it is part of this institutional cycle, then why isn't it at all-time highs? Because every other market is at all-time highs. The S&P is at all-time highs. The Nasdaq is at all-time highs. Gold is pretty much at all-time highs, give or take a little bit. Why isn't Bitcoin at all-time highs? And recently, there's been a bit of a theory as to why Bitcoin is having such a hard time. And the theory has been called the ICO moment for Bitcoin. What is this ICO moment for Bitcoin? The people who came up with this theory, and there's a couple of them who came up with it at the right time. Jordy Fisser is one of them. Matt Hogan from Bitwise is another one of them. And there's a third person that's come up with it. And what these guys have come up with is they basically said, look, Bitcoin's having its IPO moment. And when they say the IPO moment, you almost got to think of Bitcoin like a tech stock. And up until now, there's been no way for big holders, people that bought Bitcoin very, very, very early, to sell Bitcoin, right? They could, like, if you had $9 billion worth of Bitcoin in the previous cycle, there was really no way that you could sell that $9 billion into the market. What's happening in this cycle is that, as you can see on my screen, there are many, many wallets and many, many holders of Bitcoin that bought Bitcoin very, very early in the game. And now that they've got institutional liquidity, are starting to diversify their investments or take some profits. Like, I mean, if you look at this one, this is a whale. We think we know who he is, who sold 80,000 Bitcoin, valued at $9 billion. And this is a whale that held these Bitcoin for 11 years. And he's not the only one. Here's another one of a Bitcoin whale that hasn't moved funds in 6 years, deposited 2,300 Bitcoin to Paxos about a week ago. And this whale holds $3 billion worth of Bitcoin. And so what this theory says is that just like in previous IPOs, and I'll show you some charts of previous IPOs. This is the Robinhood IPO, and you can see that after the IPO there was a period where the stock was consolidating while the insiders were kind of selling and the early investors were kind of selling. And once they were out, the new cohort of investors actually went up. This also happened with Meta. So if you look at the Facebook or Meta chart, and you look at what happened to them at launch, what you see is when they IPO'd, there was a period of chop where people got taken out, and then we started to climb again. And so the theory kind of says, look, this is the first time that these big investors have been able to get liquidity en masse or on size. And so what's happening now is that the coins are transferring from the weak hands, from the old hands, the whale hands, to the institutions. And that's pretty much why, or one of the theories as to why Bitcoin has been so subdued of late.
Before we continue with the video, let me tell you about a very important topic, Bitcoin. It's had a 10-year compounding annual growth rate of over 80%, and it's been one of the best performing assets in the world. That means there's a high opportunity cost to spending your Bitcoin savings. Now, with today's sponsor, People's Reserve, and their revolutionary Bitcoin-powered financial products, you can now borrow against your Bitcoin with no credit checks, no income verification, no taxable event, and no rehypothecation risk. Their flagship product, the Bitcoin-powered mortgage, is redefining home ownership for Bitcoiners. And here's the best part. Liquidation risk isn't tied to price volatility, only to non-payment defaults. This protects borrowers and lenders from the biggest risks in traditional crypto lending. With the advent of People's Reserve's revolutionary lending products, you can now unlock the purchasing power of your Bitcoin savings without having to give up ownership. Go to peoplesreserve.com, link down below, or scan the QR code here. Sign up for their newsletter and discover how to build wealth smarter. That's peoplesreserve.com. Galaxy Digital's head of firm-wide research said recently that the days of Bitcoin's 100x and 1000x over, just to piggyback off of what you were just saying, the changing of the guard for who owns Bitcoin may be contributing to this. Now he's lowering his year-end price target from 185,000 to 120,000, which I guess seems a lot more likely since we have only 6 weeks left before the end of the year. But it seems like people are revising down their targets. They're feeling less bullish now. Do you feel that sentiment shift around you, Ran? Are people a little more cautious now than beginning of the year or even late last year?
You know how it is with Bitcoin. When the price goes down, everyone gets cautious. And when the price goes up, everyone thinks it's the best thing in the whole world. Again, you're talking to us after a 21% crash. And, after a 21% crash, everyone's subdued and everyone's seeing the bear case. You know the difference. The difference is that when Bitcoin recovers, and it does every single time, people start to FOMO into it, and then basically we get into a position where people start making ridiculous targets, 250,000, 300,000, etc., etc. Having been here for multiple cycles, I've kind of learned this pattern, and so I kind of ignore the noise, and where will Bitcoin end the year? Well, the year is 45 days away or 50 days away, and so. Can I see Bitcoin going to 200,000 in the next 50 days? Probably not. Can I see it getting to 130, 140,000? Possibility. But talk to me about how Bitcoin will end next year. And if we don't follow the 4-year cycle and we don't get into a bear market, then I think it's going to aggressively overperform the NASDAQ.
The bigger issue, like you brought up earlier, is where the capital was flowing and where it's flowing from. So that's two separate questions, where it's going and where it's coming from. Where it's going could be Bitcoin or the alt space, which we'll talk about. So if you believe it's going to be Bitcoin later in this cycle, that means Bitcoin dominance will rise. Where it's coming from, well, it could be institutions, it could be governments, it could be retail, it could be a combination of all three. We recently saw a huge flush out of leverage positions, as you know. The overall crypto market crashed billions of dollars in the last couple of weeks. In fact, there was one day, I can't remember which day, but that was the single largest day drop for market cap in the entire crypto industry, even though Bitcoin still only drops, a couple percentage points, but the market cap has already grown so large, you know what I mean? So people were looking at that day and saying, well, a lot of people got flushed out and now retail is not going back in again. So can you just help us understand, where's capital going? Where is it going to be coming from in the future?
So interestingly enough, the big crash that you referred to was on October 10th.
Yes.
And that was an embarrassing, systematic collapse of the centralized part of crypto, the centralized exchanges in crypto, and specifically Binance. I mean, let's just call it a spade a spade. And what happened in that correction is that the retail investors that had leverage got absolutely liquidated. I mean, it was crazy. Tokens went to zero, 1.6 million traders got liquidated. The official numbers say that about $20 billion was liquidated on the first day, but the real numbers, I can tell you, are way, way, way higher than that. So the retail speculator has been wiped out. The retail investor that bought and hold or buys and holds Bitcoin, I mean, they are on a 20% correction, but they certainly aren't wiped out. The institutions didn't even feel it. And I'll tell you how I know this, because I was at a conference in London called DAS, the Digital Asset Summit, which is primarily an institutional conference. And the conference happened on the weekend just after the 10th of October. And I can tell you that at that conference, no one was rattled, no one was jarred. And the reason is that no one had leverage and no one got liquidated, right? The only people that got liquidated in that correction were the native crypto investors. The CME investors, the people that took leverage on the CME, well, the CME was closed when this all happened. And when the CME opened on Monday, the price had already stabilized. And so the institutional investor didn't even feel this, barring the fact that when they left on Friday afternoon, Bitcoin was trading at 117,000. And when they came back on Monday, it was trading back at 115,000. That's all they felt. The retail investor got wiped. Luckily for us, when I say luckily, there's no luckily when people lost so much money through a systematic failure, but luckily for us, the retail investor is not that important in the cycle, because the amount of capital that's flowing in via the ETFs and via the treasury companies eclipses the amount of money that retail investors could bring in by a ratio of 10 to 1. I mean, an interesting stat for you, if you add up the amount of Bitcoin owned by the ETFs and the digital asset treasury companies, you're talking about 10% of the Bitcoin supply now in the hands of institutional investors. Now, bear in mind that probably about 20% of the Bitcoin supply, 25% of the Bitcoin supply is gone and dormant and will never, ever, ever move. People that lost their keys, et cetera, et cetera. 10% of the supply is now sitting with institutions, and that number is increasing every day. In fact, yesterday was one of the record days for Bitcoin. I think there was like $500 million that flowed into the ETFs. So there's still institutional capital going into the ETFs. You can see the numbers over here. So I think, yesterday was 524 million that actually flowed into the ETFs. So, as you can see, like, there is an institutional bid. And I think that institutional bid is keeping Bitcoin above this $100,000 level, which it's managing to defend quite well. Could we go, below the $100,000 level? Possibly. Are we near a bottom? I think we're very, very, very near a bottom. And I can walk you through my checklist and why I actually tweeted that I think we've bottomed. And if we haven't bottomed, I think we're very, very, very close to bottoming. So my checklist actually goes on a couple of checkpoints. The first one is just looking at the basic chart structure, which is, have we taken out the low? And what I said that is generally how Bitcoin corrects, and you can see it pretty much in every other correction. If you look at it here, usually we have a very aggressive wick down, and then we come back, and about 30 days later, we take out the lows. So you can see it over here. This is a very clear example of when it happened. You hit a high, and then here, this one took 17 days to go back and take out the lows. You can see it over here in this correction over here. So we took out, we wicked down very, very, very strongly. And it took us about 27 days to go back and take out those lows. Really, every real Bitcoin correction has exactly that pattern. I can take you all the way back to 2021. There it is. There we take out the lows again. And in this correction, we did exactly the same thing. We bottomed on the 10th of October over here. And as you can see, we came back and we took out the lows over here. So from a chart structure point of view, the first indicator tells me, okay, we've taken out the lows and it took us about 30 days. So that's all good. The average drawdown, well, we know that the average drawdown in this cycle is about 23%. And we have hit 21%. So give or take, I mean, we may go down 25% or 26%, but give or take, we're pretty much in the range of bottoming. The third one is the sentiment, right? And for me, what I do is I monitor the fear and greed index. And generally in Bitcoin, what you find is that when you bottom, it's usually when the indicator goes to extreme fear for a period of about 5 to 7 days in a bull market. And what you'll realize here is in the last 7 days, we have been in extreme fear for about 5 of them. So last week we were in extreme fear. Yesterday was fear. Today we're back at extreme fear. Tomorrow we'll be at extreme fear again. And so that indicator is kind of showing to me that it's almost bottom time. I wanted to show you how accurate this indicator actually is when you actually put it onto the chart. Let me just see if I can call it up here. So here we go. So this is the fear and greed index. I'm going to put it on the weekly just so we can zoom out and we can see it. But what you can see is that if you bought Bitcoin every time that we hit extreme fear and we remained there for a period of like a little period, let's say a week, 2 weeks, generally that superseded a massive up move over here. I mean, pretty much any time you look at it, that's exactly what happened. So that indicator also did win for me. In terms of liquidity, so what we've realized now is that there is more liquidity flowing into crypto markets. I don't have the actual charts to show you, but you can see that liquidity has gone from negative to positive. The next thing is the Bitcoin leverage divided by the altcoin leverage, when the Bitcoin leverage is bigger than 50% of the altcoin leverage. So in other words, the total leverage in the market, 50% actually lands up being Bitcoin. And that indicator has almost hit again. I don't have the actual chart, but it's currently on 47%. Then generally, if you look at just some other chart indicators, if you look at the RSIs, which is the RSIs here, in a bull market, the Bitcoin RSI usually bounces when the RSI hits 45. In a bear market, the Bitcoin RSI, you see, if there's the RSI over there, and you can see I've put my cursor on there, and basically what you can see is you can see it over here, 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 and you can see it over here. In a bull market, we generally bounce at about 45 on the RSIs. In a bear market, we go below that. So this is one of the bear markets in crypto. And here we've gone under the 45 RSI. So if under the assumption that we're still in a bull market, we've hit that 45 level, and this is usually bounce level for Bitcoin. And so when you again, you can look at it again on the Bollinger Bands. So if I call up Bollinger Bands, let me just see if I can get you some real Bollinger Bands. Let me see if I can call that one. Okay, so okay, generally, so yeah, here's the Bollinger Bands over here. Generally, what you want to see in a bull market is Bitcoin bouncing off the lower end of the Bollinger Bands. And you can see over here that we're at the lower end of the Bollinger Bands as we were over here and as we were over here. Now, you can spike below the Bollinger Bands for a very short period of time, just like we did over here. But generally, in a bull market, you want to touch the bottom Bollinger Band and you want to continue to go up. So when you look at all these indicators, basically, you kind of realize that, look, I mean, we may go into a bear market. There's probably a 30% chance that the cycle is over and we're going into a bear market. But if we're not, then all the bottom indicators are kind of triggering, and that means that we're probably ready for the next move up.
Can you go back to that bottom indicator checklist one more time, Ron? And I like to just suggest something for your consideration here, and you can evaluate this. So you have chart structure average. Okay, so you have a lot of technical and sentiment indicators on. What about if you consider the fact that it's underperformed the stock market, which, as you know, the stock market, the NASDAQ in particular, and Bitcoin have historically held a very close correlation. And I'm not saying that correlation is dead. I'm just saying Bitcoin has not had the same beta to the upside that it has had historically. And when you look at that, you might think to yourself, gee, either the stock market is completely way overvalued and is due for correction. In other words, Bitcoin sniffing that out, or the more likely explanation is maybe capital is flowing away from Bitcoin into other more speculative areas in the tech space, which have historically been correlated with Bitcoin. And so therefore, it's not performing as high as it should be, therefore a bottom. Does that make any sense to you?
Okay, so that is the one thing that does keep me up at night. And the reason why that keeps me up at night is because if the stock market does start to aggressively correct, I don't see a world where the stock market corrects and Bitcoin doesn't, right? So then I look at the stock market chart, and I'm looking specifically right now at the S&P 500. All the stock market charts look similar. And what I'm seeing here is that if you look at this channel that the S&P 500 has been in since 2017 or 2018, we're now at the top of that channel. Now, what happens when you get to the top of the channel? Well, you could flirt with the top of the channel like we did over here in 2022, right? And here we flirted with the top of the channel for about 70 days. And then we corrected, and we corrected pretty aggressively. In fact, in 2022, we corrected all the way down to about 27% on the NASDAQ, which is, in NASDAQ terms, that's quite a big correction. Now we're at the top of the channel again. And if I were a betting man, I would kind of say that, we're not going to break this channel first time. It doesn't make sense if we'll break this channel full time. And so the one big risk for me, which aligns with the end of the Bitcoin cycle and a deep correction in Bitcoin, is the S&P and the channel that the S&P is in. If we follow and respect this channel and start coming down, and I mean, again, like I'm just going to, and we start doing this, and I don't know, come down and maybe touch this line over here, that would mean that the S&P is probably going to get a 20% correction, which I think we both agree wouldn't be unusual because, it's run so much in the last 2 years. So as I was saying, that is the one thing that actually does keep me up at night, is that if the S&P starts to correct right now, I don't see a world where Bitcoin can remain strong against the backdrop of a correction.
Yeah, but here's my counter to that. You don't need to stay up at night anymore, because we've seen that the stock market has continued to grind higher, and that hasn't lifted Bitcoin in the last couple of weeks or months. So why, if it's not lifting it on the upside, why would it bring it down on the downside?
Because markets aren't rational, and and I know that when the S&P goes risk off, all hell breaks loose, and every asset goes down. So look, I'd love to live in La La Land or in pink rosy sunglasses land, where we can live in the fantasy that if the S&P corrects, Bitcoin's not going to correct. Trust me, if the S&P corrects, Bitcoin's going to correct, and that's going to be quite painful.
Before we move on to alts and finish there, I want to talk about macro then. So just liquidity is expected to increase in the money supply system going forward, especially since the Fed has announced the end of quantitative tightening in December. People are excited about that. Ron, are you excited about that? Is that going to be good for the altcoin space, for the Bitcoin space?
I'm excited about that. I'm also excited about the potential stimulus that they're talking about. The
$2,000, the Trump,
the $2,000 checks. I mean, that's something to be, I think, quite excited about. We saw what happened. The $2,000 check is a $450 billion stimulus into the economy. Now, just to give you an idea, the total COVID stimulus checks would double that, right? Or maybe 2.5 times that. So this is nothing to laugh about. This is if they do this, and Scott Bessent actually came out today and reiterated that they are thinking about it. Well, I mean, more than thinking about it, right? Like more than thinking about it. They're talking about a $400 billion stimulus. And you remember what happened to stock markets the last time we got the stimulus, right? You were around. I remember that.
Yeah, that was a while ago. And I remember last time they were people who got the stimulus, a lot of them invested or speculated, whatever you want to call it at the time, in the altcoin space, in cryptos. Robinhood blew up. A lot of discount brokerages blew up. Here's the argument this time. You even said yourself, the retail crowd is not here anymore. They're dead, right? Figuratively speaking. And I've heard this from other people as well. The retail crowd now has other things to gamble on. People who said this to me use the word gamble. Right? They're not going to go into the meme coins anymore this time around. With the $2,000 stimmy check, they've got sports, they've got penny tech stocks, they've got a bunch of other stuff this time around.
Well, hold on a second. I agree with you. I agree with you, but I want to show you something. If you don't mind letting me share my screen, I want to show you something. If you were a retail investor and you just got yourself some free money, my question to you is, are you going to go and put that money into NVIDIA? After the chart is up, I don't know. Let's just quickly look at the NVIDIA chart. The NVIDIA chart is that's what the NVIDIA chart looks like. Let me just delete my Bollinger Bands here so we can get rid of that, get rid of this and get a better view on the chart. So that is the NVIDIA chart. And if you look at the performance of NVIDIA since April this year, NVIDIA is up 125%. If you were a retail investor and you were given a stimulus check, is that where you'd go and put it? I'm not sure. I think that would follow a similar pattern to what happened in the last cycle, if that happened. The only question is now, I must be honest, initially, I didn't think that Trump would follow through with this. I thought he was posturing because of the Supreme Court case against his tariffs. But I mean, it seems like, like with Trump, it could be just a Trumpism. But when Besson says something, it becomes quite serious. And Besson's been today, actually came out twice. I'm actually looking for the article for us. But he actually came out and he actually said like he actually broke down things about how this stimulus would be delivered. I mean, that's where they're at the moment. Yeah. So here it is. Actually, I've actually got the interview for you. Let's just quickly have a look at it. So. It says the Treasury Secretary Besson just confirmed two major stimulus plans. The first is a $2,000 rebate plan. Families earning under $100,000 could soon receive a $2,000 direct rebate. This would work as a tax credit or cash payment, putting money directly into households. The Trump Accounts program, every child born from January 1, 2025 for the next 3 years will receive a $1,000 investment account automatically. So, I mean, say what you want, but this is stimulus.
Okay. Can we talk about, it just came out today, by the way. Allow me to share my screen real quick. SEC Chair Atkins, here we go, unveiling a plan for token taxonomy to redefine crypto regulation. You're aware of this, but I'll just read the first two paragraphs. Spearheading an effort to create a token taxonomy that looks to delineate between what current cryptocurrencies would be securities as the agency forges ahead with a new approach to regulating digital assets. Importantly, he says, Importantly, he says, in the coming months, I anticipate that the commission will consider establishing a token taxonomy that is anchored in the long-standing halving investment contract securities and analysis. Cryptocurrencies, here's a kicker. Cryptocurrencies can be part of an investment contract, but it doesn't mean they will stay that way forever. What does that mean? Is that more regulation?
I don't think. Look, I think it is more regulation, and I mean, in a world where we don't really have regulation, it's nice to have some regulation because regulation means clarity, right? I think if anything, we should applaud the new administration at the speed at which they're moving and the leniency at which they're moving. The Genius Act went through, and now they're talking about putting through the Clarity Act. The Clarity Act would effectively deem most of these crypto assets as commodities, and that would be regulated under the CFTC. And the CFTC have been quite amazing when it actually comes to regulating crypto assets. So I'm not sure. I haven't followed through. I haven't looked exactly at that article. But in general, the administration is very, very, very much on the correct trajectory. And to be honest, it's the best case scenario.
Okay. So it's not really more of a headwind for crypto adoption, because it sounds like if things fail the Crowley test, you may not see a lot of things in investment portfolios, right? Because that's the drawback here.
I think if anything, this administration shows that they're not only pro crypto, but they're actually promoting crypto. Like that's how much pro crypto they are. And so It's not like the old administration where every time the SEC utters something, you expect you expect so much happening. This is a very, very, very friendly administration, and yeah, I mean it's perfect.
Ron, is altcoin dead? Or altcoins? Is the altcoin market dead? Are altcoins dead? I have on my screen here Zcash. This is an exception to the rule. I'm not making the case that all altcoins are performing like this. First of all, do you have an explanation as to why it was dormant and then all of a sudden exploded and now it seems like this thing is popping? But we can talk about Zcash, but more broadly, I want to know where the altcoin space is headed.
Well, I mean, look, let's talk about Zcash because I think Zcash is a very, very, very interesting
Yeah, I know. Yeah, go ahead.
So first of all, for your viewers who don't really know what Zcash is Bitcoin, but private. When I say it's Bitcoin, it has the same algorithm that Bitcoin runs on, which is called a proof of work algorithm. It has the same 21 million coin hard cap. It's exactly the same technology, except the one flaw that Bitcoin has is that if I pay you with Bitcoin, you can see the transaction on the ledger, and then you can see what every single transaction I've ever made and how much money I've got in every single one of my accounts. Now, look, that's great for transparency, but I don't know, when you're transacting, do you want to, when you're buying coffee using your crypto assets, do you want the coffee barista to see your entire financial history? Probably not.
No, but okay, yeah, fair enough. Yeah.
And hold on. If you're an institution, and we know that institutions are one of the pillars of banking and institutions is privacy, right? Do you want the bank sharing every single account detail of yours every time you do a transaction? It's not logical, right? And so Bitcoin is decentralized money that is completely transparent and that can't be interfered with the government and that has a predictable inflation cycle or a predictable inflation. Zcash is exactly the same thing, except it allows you to shield elements of the transaction in such a way that you don't reveal your entire financial history every time you're making a payment. So it's almost like paying with cash. It's like you can make a payment, I can pay you. It's completely compliant because of the way that the privacy is enacted. It's completely compliant. In other words, if your auditor wanted to review it or the tax man wanted to review it, it's completely compliant. But you're not exposing all the details of the transaction. And so basically what you have here is you have a Bitcoin, which is cheaper, faster, and has privacy. Okay, now ask yourself a question. In the previous administration, I understand why that wouldn't work. The previous administration hated crypto, and the one thing that they hated more than crypto was private crypto, right? Like they hated crypto, but if you told them you were in private crypto, you were automatically labeled as dealing in illicit things and stuff like that. The current administration is actually pro-privacy. They acknowledge the right to privacy that people have. And so now we have this token called Zcash, which is Bitcoin with privacy. Now ask yourself a question. If Zcash is indeed Bitcoin with privacy, you got two types of money. One is a hard money, which is slow to transact and which has which is completely transparent. And the other one is quicker, cheaper, and allows you to shield transactions in a compliant way. Now, I don't think that Zcash should be bigger than Bitcoin, but I do think that Zcash should be a certain percentage of Bitcoin. 5%? 10%? Well, at 10% of Bitcoin, a Zcash coin is worth $10,000. Currently, it's trading at $600. So to me, Zcash is actually one of the most exciting narratives of the cycle, because the new administration acknowledges the right to privacy. They want compliant privacy. Zcash is compliant. And I mean, today there was a digital asset treasury company which was launched. So now there's a listed entity on the NASDAQ, which has one task, and that is to buy Zcash. So I think it's super, super, super exciting, this whole Zcash thing.
I understand the properties of Zcash that you've outlined that may be attractive for a lot of people, but let's just, again, we're taking Zcash as an example. I'm not trying to pick on Zcash, but ask yourself now, Rand, would you use something like this as money? Look at this chart. One day it's 440, one day it's 720, the other, and the next day it's 507. I mean, why would this be, why would anyone use this as a medium of exchange? Like, I don't
I
know
think
if
we're
my
in the
banana is
early,
going to, yeah, go ahead.
I think we're in the early part of an adoption cycle, just like we were with Bitcoin back in the day, and everyone had the same criticisms, right? In the early part of
Sure.
an adoption cycle, you're gonna get a lot of people adopting it really quickly, and that will drive volatility. But as you know, and as you saw with Bitcoin, as the asset matures, then what happens is the volatility starts to end. I mean, I'll show you something which is actually quite interesting. I hope I've got it here. Here it is. So here is the Bitcoin volatility at the moment. It's literally never, ever, ever been lower, right? Bitcoin
Yes, that's
volatility
right.
has never, never, ever, ever been lower. And so that just shows you that the more institutionally accepted and more socially accepted and the more adoption an asset has, simply the lower the volatility. In the old days, in 2015 and 16, I don't know if you were around, but I don't know, the Bitcoin volatility was insane. I remember the one day I was at the dentist and Bitcoin went from $1,500 all the way back down to $600. One of the scariest days of my life. That couldn't happen today. So like it's an early part of an adoption cycle. The early holders get rewarded if they're willing to ride out the volatility. And the late holders will land up using the asset, but they won't enjoy much more of the upside.
If you had to take a bet on where capital is flowing from, I'm not talking about the speculators on the retail side, retail investors and or institutional investors. If you had to pick between Bitcoin, stable coins and their associated tokens, or Bitcoin treasury companies, which are a different asset class in itself, or maybe AI cryptos, which of those four would it be? Or five, or none of the above?
So there's four narratives that I think are worth watching in the next couple of months.
Okay.
So Bitcoin, ETH, Solana, every crypto portfolio should have those three. On top of that, probably the most exciting narrative right now is privacy. There's two use cases in privacy that are important. One is private money, which is what you're seeing with Zcash. And the other one is private transactions like smart contracts. Imagine like being able to do smart contract transactions, put real world assets on chain in a private and compliant manner. So the first narrative that I'm really, really bullish on is privacy. The second narrative that I'm really, really bullish on is AI, and specifically AI agents. And the reason why I'm so bullish on AI agents is because, not sure if you're aware, but Coinbase launched a protocol or a standard called X402. Now, what is X402? It's an open source standard that anyone can use. There's no cost to using the standard. It's an internet standard. And effectively, what it does is it allows machines or AI to transact on the internet using crypto or blockchain money without having to have a middleman or a credit card or whatever else. And so we've opened up the world for AI agents to be transactive without human intervention, which hasn't existed up until now, and to do micro transactions, like 0.0001 cent transactions, right? And so why is that so exciting? Because I think that there's going to be a parallel digital economy created by AI agents. And I think that the currency that the AI agents are going to use is not going to be a credit card. It's going to be some kind of crypto money, whether it's USDC, USDT, Bitcoin, or any other currency. We've now created a ability for AI agents to become commercial. Now, I don't know if you can fathom how big that is, but I think that in the future, every transaction is going to AI is going to do all your transactions. You're literally going to tell the AI, listen, book me a holiday. And the AI is literally going to go and book your holiday, but they're not going to pay with a credit card. They're going to pay with some kind of crypto money because now that standard is adopted by Coinbase, Cloudflare, Google, right? So this has now become an accepted standard. So I'm super bullish the AI narrative for crypto. The third narrative, which I'm extremely bullish on when it comes to crypto, is the digital asset treasury companies. And the reason why I'm bullish is because the market's so bearish on them and they're all trading at under net asset value. So you kind of think to yourself, hold on a second, you got these companies. These companies have really got one objective, right? And the objective is to buy tokens and stake tokens. So the digital asset treasury companies buy Solana and stake Solana, buy ETH, stake ETH. And some of them are trading at 50% less than their net asset values. Like, you understand like what I'm saying to you. There's a bunch of companies out there that are trading at 50% less than their net asset values. And so I don't know if you're not buying companies that are holding assets at 50% of the net asset values, at some point, either they'll get taken over in a hostile manner, or they will liquidate, or the market will just realize that there's assets in these companies and you should be buying them. The last narrative that I'm very excited about, but it's very hard to invest in, is what they call prediction markets. I don't know if you're familiar with what a prediction market is, but a prediction market literally allows you to take a bet on anything. You can predict anything. You can predict whether Bitcoin will be above 120 or below 120.
I'm gonna leave this headline up as you talk about this. Yeah, go ahead.
Yeah, you can predict whether Joe Biden's going to eat an ice cream on TV again or not. You can literally take a prediction on anything. And these prediction markets have become the ultimate source of truth. They predicted the New York mayoral race before anybody else predicted the outcome. And the reason is prediction markets literally allow you to put your money where your mouth is. So it's not like polls, because a poll, you kind of vote for the person who you want to win. A prediction market is where you're willing to put your money, right? And then that becomes really, really different. And the statistics show that these prediction markets are correct over 96% of the time. And so crypto has created a new financial system which allows people to literally predict and place bets on anything, right? And I mean, you'll agree with me that that's something that's really, really, really powerful, right?
Absolutely.
So that is why I am so bullish on those four narratives. Literally, those are the four narratives that I'm playing. You asked me about altcoins. I think the notion that we're going to get an altcoin season where every single altcoin is going to run and everything's going to explode, not going to happen. But I do see a world where privacy coins do really, really well. Prediction market coins really do well. AI infrastructure projects in crypto do really, really well. And I do see a world where you can buy a digital asset treasury company for 50% of its net asset value. And if you're patient, then at some point you kind of know that that gap has to close, because arbitrages won't allow for an arbitrage to be open for a long period of time.
So I just have here on the screen, Polymarket becomes Yahoo Finance's exclusive prediction market. And in other news, Google is also integrating Polymarket and Kalshi's data for their predictions. Here's an interesting article though that came out, was it today? No, a couple of days ago. Apparently, 25% of Polymarket's trading volume may be fake, according to a Columbia study. Nearly 60% of weekly trades in December 2024, that was a while ago, but anyway, they were flagged as likely wash trading. Coordinated networks of 43,000 wallets. Polymarket, a paper published Thursday, analyzed more than 2 years of on-chain data. The researchers estimate that nearly 25% of the platform's historical volume involved users rapidly buying and selling contracts, often to themselves or with colluding accounts to inflate activity metrics without changing their net market position. This is kind of scary, because if people can influence how people vote based on Polymarket or Kalshi or whatever betting market results. In other words, let's say you're somebody who's on the fence, I don't know, between Trump or Biden, whatever. I'm just using that as an example. I'm going to vote for the guy that's clearly leading in the prediction markets. Well, you can influence stuff this way, hey?
Yeah, so again, I think first of all, that's a very old article. If I'm not mistaken, that article came out about a year ago, if I'm not mistaken.
The study came out, was done from a year ago, but apparently this particular article is studying the study just now. I mean, this article from CoinDesk came out a couple of days ago, but yeah, the study was based on 2024 data.
So so you're again looking at a protocol which is was in its very, very, very early days and didn't have real adoption. And in a market that's illiquid, you can play games, but the minute that a crypto protocol actually has adoption, then the liquidity will basically flush you out if you try and arbitrage something, right? And so what's happening now is those games and those shenanigans, you couldn't do them now because there's so much more liquidity. I don't know the exact numbers, but I think that Kalshi's predicting $50 billion in bets next year. Now, I wouldn't want to be trying to gamify or arbitrage a market where there's a $50 billion check on the other side to try and net off that arbitrage. In the old days, the markets were very liquid. There were very few people trading on the markets, and you could kind of you could game the markets, but you can't do that now. Those days are gone.
Fair enough. I don't know if you can comment on your bot trading, but you told me last time it was very successful. Are you still using that? I think 2/3 of your portfolio were allocated to bots.
So,
yeah.
Yeah. So let me actually call it up for you so that you can actually see the results. So remember, we started the account with $50,000 in the account.
Yeah.
I'm glad to say that we survived the big crash. And if you look at the wallet today, the wallet has I don't know if you can see my screen, it has $147,000 in it. So I think net, the results have been pretty good. We've tripled our money despite all the corrections and everything else. We've landed up tripling our money. So we've started with 50,000. We've got 150,000, 147,000 in the account. So it's a very good and very profitable strategy. So we just keep deploying these bots and keep deploying the bots.
All right. Well, where else can we follow you, Ran? Go ahead.
I have my Crypto Banter channel, which is where I do a live show every single day. I have a second channel, which I call Crypto Insider, and that is where I don't do a live show every day, but I drop more long form videos once a week. It's called Crypto Insider. That's the channel over there. And then you can get me on Twitter at CryptoManRan. That's pretty much where you can find me.
All right, very good. Thank you very much, Ran. Great show today. I appreciate your time. We'll put the links down below so you can check out Ran's work in Crypto Banter. Thank you again, and we'll see you next time, Ran. Take care.
Thank you, David. Thanks very much.
Thank you for watching. Don't forget to like and subscribe.